is several instruments offered by Maybank. I can see that there's two types of product, which is conventional and Islamic. But what is the difference between two of them? Oh yeah, there's a video about them. Let's watch it first.
Assalamualaikum. So let me briefly explain the specialty of Islamic contract compared to the conventional loan. An Islamic contract is based on Sharia law as stated in the Quran, Hadith and Sunnah. The Islamic bank financing is structured as a purchase and resale of real asset, just as car, house, commodity or stock instead of a loan. Islamic bank must conform to a very principle where there is no interest to be charged and product offered are halal and Sharia compliant. Islamic contract which adhere to Islamic Sharia principles strictly rule out the haram business, riba and gharar. Islamic banks in Malaysia operate according to a certain course of action as governed by the Sharia Advisory Council. The Sharia Advisory Council is the most powerful authority on Islamic finance in Malaysia. Islamic contract has numerous advantages. Firstly, the Islamic contract emphasizes the need for financial agreement to be supported by real trade as they provide an efficient boost for economic activity. Besides, it helps lessen the effect of speculation on the economy because it forbids transactions involving gharar. Thirdly, Islamic contract lower the charge that are incurred on late settlement. After all, Islamic banks serve for its main objective is to ensure halal economic growth. They stick only to the business with Sharia compliant industry, thus refusing to engage in speculative trading. For investment, I would suggest mudarabah contract. Generally, the capital shall be contributed by the capital provider and shall be managed by the manager to generate income. The agreed capital shall be made available to the manager to commence the business activity. When the contract has terminated, the manager has to return the outstanding capital, if any. If the mudarabah expenditure exceeds the actual capital contribution, charge liability shall be borne by the capital provider up to the limit of the total amount committed under the contract. In terms of profit, mudarabah contract has applied profit sharing to both parties, capital provider, which Rabul Mal, and manager, which mudarib can share the profit at any ratio they agree upon. Apart from the agreed proportion of the profit, the mudarib cannot claim any periodical salary or a fee of remuneration for the work done by him for the mudarabah. If the business had incurred loss in some transaction and has gained profit in some other, the profit shall be used to offset the loss at the first instance. Then the remaining profit, if any, shall be distributed between the parties according to the agreed ratio. As example, Maybank has offered mudarabah investment account. The Maybank shall accept the sum of money placed for the purpose of investment. Capital provider should entrust the authorities to the Maybank to utilize the investment for its Sharia compliant financing and investment activities. If any profit generated from the investment will be shared between capital provider and the Maybank according to the mutual agreed profit sharing ratio. Any loss suffered from the investment shall be borne by the capital provider unless just loss is due to the Maybank misconduct, negligence or breach of specified terms. Capital provider agreed that the granting of hibah, whether in monetary form or any other form, is solely based on the Maybank absolute discretion from time to time, and the Maybank shall not be obliged to grant hibah to capital provider. The hibah may be granted and made payable to capital provider mudarabah investment account.
Assalamualaikum and hi. In this video, I would like to talk about what is a conventional loan and their benefits along with an example. What is a conventional loan? In conventional loan, the bank lends borrowers money with an interest. Then, banks earn a profit from the interest charged on the amount borrowed. For instance, when you take out a loan, you will repay the loan amount along with the interest rate and the prescribed rate over a set tenure by the installment. Based on Maybank, the interest charged by the banks is from 6.5% up to 8% per annum fixed rate, depends on the loan amount borrowed. Moreover, the tenure set by Maybank to repay the loan is minimum 2 years and maximum is 6 years. The specified rate is based on a margin above the bank-based lending rate. If a borrower makes a late payment or defaults, the banks has the power to charge additional interest to the amount borrowed. The interest accumulated is a way of paying extra fees when you pay late. The interest payable may also be capitalized, which means an interest charge is added to the total amount of interest owed since the last payment of the balance. There are several benefits of conventional loan, which is first, it does not need to conform to a halal requirement. This means that you are allowed to purchase any type of non-halal product and services using a conventional credit card. Second, any alteration to the terms of the finance would just need to be upstamped by the loan facility agreement. Third, if you default, restructuring or refinancing is an easier task. And lastly, the costs for early settlement, late payments or defaults are more transparent in the contract. As for benefits of Maybank personal loan, first, monthly repayment as low as RM103 per month. Second, no document stamping. Third, there is no processing fee. Fourth, no guarantor or collateral required. Fifth, fast approval. And lastly, they also have personal care insurance protection. To conclude this video, I will give an easy example to show you guys how the conventional loan works so that people will choose the conventional loan rather than Islamic loan. So the example is, if you own a legal gambling lottery ticket businesses and wanted to apply for personal loan, you can apply for a conventional loan as long as you provide the required income documents. Next, if you plan to increase the loan amount, an additional stamping fee only be needed. It shows that the conventional loan is not complicated to get. And lastly, if you're getting a conventional loan, it saves the hassle of drawing up a new agreement so that the time of getting the loan is shortened. That's all from me. Thank you. Bye.
Okay, from that video, I would choose the product from Islamic institution. So I don't know that much about Islamic banking or Islamic instrument. I think I should ask Iman because she's a finance student, right? So I guess she would know much knowledge about this rather than me. So yeah, let's contact. Oh, it's from Zira. Let's see what she's going to say. Okay, I'm going to send the link to her. Here, this one and this one. Alright, that's all.
Assalamualaikum and hi. Frequently, my friend and I got a lot of questions about what is Islamic finance is all about and how does this financial institution works. To relieve all the pain that all of you have due to these confusions, let us help you to give a clearer picture about what is Islamic finance. First of all, to understand in detail about Islamic finance, we need to know the historical data, and we will next continue with the propositions of this Islamic finance. Islamic finance has been introduced in early 1970s, where in this year there is an establishment of Islamic financial institutions such as Lembaga Tabung Haji, Bank Islam Malaysia Berhad, and Syarikat Takaful. In Islamic finance, there is a prohibition of riba. So, what is riba? Riba refers to the concept of growth, increasing or exceeding, which in turn forbids interest credited from loans or deposits. In Islam, it is prohibited to apply any predetermined interest in any transaction, which means there is no compounding interest allowed. All the market price and any charge will be disclosed between the contracting parties. Next, Islamic finance will apply the prevention of gara. What is gara? Gara means uncertainty. Based on Sharia, any transaction that occurs between buyer and seller or any contracting parties that involve need to be certain, such as the delivery of the item that involved in the transaction need to be certain in terms of date and time of delivery. Islamic finance also prohibits any transaction that consists maisir. Literally, maisir can be best defined as gambling. Maisir refers to the easy acquisition of wealth by chance, whether or not it deprives the other's right. Prohibition on monopoly. Maisir and riba can lead to the monopoly, and monopoly is a prohibited practice in Islam because it leads to injustice, same like the riba and maisir. Monopoly activities can indeed damage market price, which at first low price become high and otherwise, which should be sold at high price instead sold at low price. The maximum market price is also can act as prohibited by Islam. Next, let's talk about Islamic financial institutions operation management. How does this financial institution operation process will be done? In Islam, we will apply the Sharia law. Therefore, in Islamic financial institution, we will do any transaction that only comply with Sharia. All the transaction will be observed under Sharia Advisory Councils (SAC). This is to make sure that all the transactions are Sharia compliance. For example, we will invest the money in the company that comply with Sharia requirements and has been categorized as a Sharia compliance company by SAC. All gains from the non-Sharia transaction will be channeled to the charity bodies. Next, different with the conventional, the relationship between parties are in terms of partnerships, investor, and entrepreneur. And it is an obligation for the parties to pay or do zakat. When we talk about the financing matter, there is a possibility to have a default risk. As an Islamic financial institution, the losses that occurs due to this risk will be encountered by applying a default payment action where the charges are based on actual cost or 1% as per outlined by Bank Negara Malaysia as a compensation or a ta'wid in Islam.
Next, we will focus on the main types of Islamic financial markets. As in conventional finance, there are many different types of Islamic financial market, which each market having its own purpose and objectives. Similarly, there are different characteristics of this market. The first Islamic financial market is debt and equity market. There are two methods that the firms or government raise their funds by issuing debt securities bond or equity securities stocks. Unfortunately, in the Islamic financial market prohibited the interest or coupon payment embedded in debt securities like bond. Based on Sharia principles, loan contract must be free of interest as the additional benefit that exists in loan contract of one form of riba. Therefore, they need to issue new debt securities which is suited to Islamic debt market, which is sukuk. However, sukuk are not likely a loan contract as there is no add value returned to the investor due to the prohibition of riba. Next, We're going to see the equity securities, which are different from debt securities, as the former represent partial ownership in the issuing entity while the latter have no such right. In addition, holding the equity securities are riskier than most long-term debt instruments due to the tendency to have higher expected return. And meanwhile, for equity securities in Islamic equity market, the equipment instrument must be structured based on the permissible rules and principles stipulated in the Sharia. Besides, the stocks are represented undivided shares in the ownership of corporation. Thus, it is important to make sure that the stock does not involve in Sharia prohibited and unethical investment activities such as gambling, prostitution, and many more. Next, we're going to see money market and capital market. Money market is a financial market that facilitates the trade of only short-term debt securities, which is less than 1 year. For Islamic money market, there is three main functions to serve as purpose of Islamic money market. The first function is liquidity management. It serves as avenue for Islamic financial institutions to source daily funding or either as a short-term investment. Besides, by allowing Islamic financial institutions to maintain optimal liquidity in order to fulfill the demand of the customer. The second function is serve as avenue for second trading of money market instrument. The instrument in the money market provide different level of risk, return, and maturity, which depends on the objective of the investors to invest. As we can see here, there are a few examples of instruments such as government investment issues GII, Islamic Treasury Bill, IGB, Islamic Negotiable Instrument INI, and many more. Lastly, the function is used as a channel for a central bank to conduct its monetary policy. The mechanism is just same as the case of the conventional market model. Next, we are going to see the capital market as a financial market that facilitates the trade of longer-term debt securities, which is more than 1 year, and equity securities. Islamic capital market were based on Sharia principles, and in the case of conventional capital market, it was constituted as integral part of Islamic financial system. In general, an Islamic capital market are similar to conventional capital markets, but their core elements are quite different, which is more to Sharia principle. As a result, Islamic capital market offer instruments that are based on Sharia compliance, such as Islamic equity securities and Islamic debt securities, which is sukuk. Next, we're going to see primary and secondary market. It is very important for us to know which is the best market that we can do for trading and investment. So we need to know which one is for initial trade securities or subsequent resale in markets. Initial trade securities are known as primary market, where the corporate and government issues and raise funds from the initial buyers of securities. Initial issued instruments such as bonds and stocks are traded for the first time in the primary market. This allows the issuers to raise funds from the trading. Secondary market is where the existing market are traded to trader or buyer of the securities, which is quite different from the primary market, as the existing instrument which bond and stocks that are sold not giving the issuers any funds. Usually the trading of securities takes place at organized exchange and over-the-counter market. From the slide there, we can see the examples of organized exchange. Okay, but we need to remember that secondary market play the most important role in the financial system. First, it provides liquidity, which is represent the degrees of the securities that can be easily liquidated to earn more cash. Second, as a place for getting more information for traders by determining the price of securities. And for Islamic finance, it is quite challenging to promote the vibrant and efficient of secondary market that follow the Islamic financial system. The reason is because of limited number of Islamic financial instruments and structure that are qualified for secondary trading, especially related to debt securities. For instance, the debt trading or buyout line has been a point of debate among Islamic jurists whether the debt can be traded to third party as discounted value.
In this session, we will talk about the Sharia contract. In the markets, the Islamic institution will offer various types of instruments to be given to the customers. It depends on the type of Sharia contract that the customer wants to enter and to be bound. Sharia contract is a form of contract and an expression made by the contracting parties to declare their intent to undertake a contract and to be bound by certain obligation. Sharia contract can be classified into several groups, which are first the exchange-based contract, Uqud al-Muawadah. This kind of contract involves the exchange of one counter value for another. Exchange-based contract can be grouped into two categories, which are sale-based contract and lease-based contract. Sale-based contract involve selling some valuable object for another. For examples, they are buy al-murabaha, buy al-istisna, buy al-sarf, and others. Lease-based contract includes lease contract such as ijara summa al-bats. Next is partnership contract. Partnership contract is an agreement in partnership which sets out the terms and conditions of the relationship between partners, including the percentage of the ownership, distribution of profit and losses, and the period of the agreement. In Sharia, there are two types of partnership contract, which are musyarakah and mudarabah. The difference between these two is the capital provided. There is also security contract, also known as uqud al-istishraq. Kafala is a guarantee contract to perform the promise or discharge the liability of a third person in case of his default, while arahnu is a pawnbroking contract whereby a valuable item is collateralized to a debt which may be utilized as payment should the debt is not repaid within the agreed period. In addition, to the customers that wish to give wealth to another party without getting advantage from the recipient, there are contract that falls under charitable contract, which is uqud al-tabarru'at, which are hibah and wadi'ah. The fifth one is an agency contract, wakalah, in terms used for Islamic agency contract. Last but not least is another supporting or known as weaving contract, also known as uqud al-isqatat. Waiver of contract, also referred as giving up a contract right by one party. It can be in many ways, such as hiwalah, mukasah, ibra, and ta'wid.
So, that's all from our group. Thank you for listening. Bye.